So with the stock market not doing very well, where do you actually put your money in? And not just where do you put your money in, but where do you confidently put your money in, knowing that there's a high chance you're going to get a return on investment and it's going to be pretty stable. And for a lot of investors, a good thing to know when they're putting the money into investments is that it's going to be hands off, so they're not actively in the market, etc. Maybe they don't have the knowledge. So one of the good ways, in fact, one of the best ways to actually put your money or invest in the stock market is to buy an ETF, so an exchange traded fund. And one such ETF would be the S&P 500, so the Standards and Poor's 500. So what is the S&P 500 and why is it so popular? So S&P 500 is an ETF, so exchange traded fund, and this is an index fund. So basically what it is it's a collection of the 500 top companies in America. So companies like Apple, Microsoft, all of these companies that the big companies, the large cap and mega cap companies. If you guys don't know much about capitalization, let me know in the comments below and then I can do a video about it. But these are large cap and mega cap companies. So they're very stable. The management team behind the companies, they're stable. They know what they're doing. They've been around for a long time. And not just that, but a lot of these companies actually pay dividends. Again, if you don't know much about dividends companies or payments, etc., let me know in the comments below and I can do videos describing what those are. And if you do, then also comment, let me know what your favorite dividend paying stocks are and companies in a nutshell that they're making good profits year on year and they're growing as a business and they're able to give back to their investors. So the fact that the S&P 500 has a collection of such companies, then as an index fund that is very stable. I mean, it's been around since the 70s, it's very stable. And you know that if you put your money in it, most importantly, you're not going to lose your money, right? And not just that, but you're likely to make a return on investment for the long term. So you can see it in a way as putting money into a bank that pays dividends. And also the S&P 500 index actually pays dividends. As you hold your investment, as you buy shares in the S&P 500, and the longer you hold it, the more dividends you accrue from that. So they pay dividends every 3 months. So every 3 months you get a share of your investment, which is really good. And not just that, but the S&P 500 is actually the benchmark for basically the benchmark for the market. So if the S&P 500 is doing well, generally speaking, if it's doing well, then that means the market is doing well. Vice versa, if it's not doing very well, they usually think, oh, the market is not doing very well. But the good thing about the S&P 500 is that it doesn't return a negative investment or negative return by the end of the year. So by the end of the year, you always make a percentage of your investment or return on investment, which is roughly up to about 9% in many cases. So it's a very good investment, especially for beginners who are looking to invest. It's a good way for them to say, you know what, I'm just going to put money in here, and why it returns a positive return on investment by the end of the year or whenever is that basically it's got a collection of the 500 top companies, right? So what you're actually making money on, or why it actually does well, is it takes the average of all the companies. For instance, using Apple and Tesla as an example. So let's say Apple as a company is not doing very well. Maybe they brought out a new iPhone that the sales didn't do well as expected, all of that, or their earnings announcement wasn't very good. And I'm not saying that's the case in Apple's case right now. I'm just using this as an example. So let's say they're not doing very well. So a lot of investors will think, you know what, Apple's as a company, they're not doing very well. Maybe I should put my money somewhere else. So that starts affecting the share price of Apple, in the sense that it goes down. Now, if you look at Tesla's, in terms of vice versa of that, let's say Tesla as a company, they're doing a lot of things. They've just bought a lot of land, or they've bought a bigger factory where they can effectively produce a lot more cars or more batteries, all of that. And investors will be looking at it like, Tesla, they're doing well, the earnings have been good, all of that, they're going in the right direction. So let me put money into that. So Apple on one hand is going down in terms of price, but Tesla on the other hand is going up. Now imagine where Tesla did so well that it offsets Apple's, but offsets it to the point where it can still return a positive investment on that. Now imagine that for 500 companies, and imagine out of 500 companies, perhaps 400 are doing very well, whereas the other 100 are not doing so well. But the average will be really good, and that's pretty much why it's a winning strategy. And in fact, this is one of the main ways that you can actually make a lot of money in the stock market, or you can actually win this with the stock market, so to speak, beat it, is that you get a number of companies that you believe are going to do well. You've done your research, all of that. If you want to be an active investor, like actually getting into the stock market, putting your money here and there, for those who want to get involved in other things, this would be a good strategy. You get a number of companies that you believe will be doing very well, or you believe will be good, what the products or services that they offer will be in high demand, all of that. And you basically just buy shares in them and you average out. So that way, at the end of the month, at the end of the year, they return a positive investment. The best way to start off in the stock market and actually make money is to invest in the S&P 500. It's a very hands-off, passive investment, which is really good and ideal for a lot of people, especially if you're working full-time, if you have kids, you have a partner. Even if you don't have a partner, you don't have kids, you could be very busy doing things. I mean, you want to be out doing things rather than just sitting in front of a computer screen looking at the market. So they leave that to people like us, and then I'll be doing videos on those analysis. So guys, this was just a quick run through of the S&P 500, basically introduce it for a lot of people that may not know what it is. Anyway, I hope you enjoyed this video, and if you did, let me know in the comments below. Also, if you're new to this channel, make sure you subscribe. Of course, hit that notification bell so you don't miss any further uploads and updates on anything. I focus mainly on the S&P 500, but I'll be looking at other stocks and do a lot of price action, chart analysis, all of that, and suggestions of what I think will be good investment. And it goes without saying this, I'm not a financial advisor. This isn't financial advice. It's just letting you guys know, possibly putting you on something. Guys, like the video, it lets me know this kind of content that you like to see, and also keep bringing out ones like this. And yeah, thanks for watching, guys. I'll see you in the next one.